Hey, so I've been in the business 20 years, and I thought it'd be kind of funny to make a video that tell consumers like what to ask loan officers to see if they know what they're talking about, and also to make it sound like you know what you're talking about, even if you don't. So here's a couple acronyms, a couple things that you might want to mention just to see, how good your loan officer is. You'll probably get better pricing if you ask these questions or you mention these acronyms. They'll probably be watching their butt to make less mistakes. So I'll just throw a few out there for you. I have been doing this 20 years. Very competent about my experience, my team, everything like that. So if you aren't getting good service, you can always call me, and don't forget to like and subscribe and all that good stuff to this amazing YouTube channel or Facebook page or whatever you're watching right now. So when you're talking to your loan officer and they get you back your pre-approval letter, right, and they've qualified you, you can ask, DTI is a debt to income ratio. DTI. So we use that very religiously. Like, what is the max DTI that this loan program goes to is a good question to ask. And what is my DTI? How did you calculate my DTI? And you say that instead of debt to income, just to sound like an insider and cool. And it'll throw them off. It'd throw me off if you mentioned DTI. I'd be like, hey, have you done loans before? What's going on? Anyway, so DTI. Next is LTV, or loan to value. And let me just explain it this way. If we have a $500,000 house, right, and you have a down payment of $100,000, you have a 100% house value at $500,000. 20% down payment means you have 20% of your cash invested in the property. Then the loan, which would then be $400,000, right, to make this little math scenario complete, would be an 80% loan to value. So it's the loan to the percentage versus your down payment. If you put 25% down on a property, you have a 75% loan to value. If you put 50% down on a property, you have a 50% loan to value. If you put 5% down on a property, you have a 95% loan to value. So kind of throw in, but you want to call it an LTV to sound cool and trip them up a little. Next is APR, and I want to tell you we do have a great APR video for you if you don't understand APR, or annual percentage rate, on this channel. I'll see if I can link it up somewhere around here. But APR is your annual percentage rate, and basically you have an interest rate like on your loan application, for example, or on your loan estimate, and then on page 3 you're going to see your APR. That's your loan amount plus closing costs, translates into your APR. And as I say in that video, do watch it by the way, but just real quick, I think it's always better if the APR and the interest rate are closer. If your interest rate's one rate and your APR is way higher, you're probably paying a lot to get your mortgage. Next is the term recastable. Is this loan recastable, John Smith or Henry Jones, who I'm getting a loan from? A recastable loan, let's just say this. Loans are amortized over a certain period. We're going to say a loan is amortized over a 30-year period. Very common, right? It means, so if your loan has a loan amount of $500,000 when you get it, and your payment's $2,500, and all of a sudden you win the lottery and you got $400,000 to put into your loan, right? To pay down your loan $100,000, your payment actually stays the same because it's amortized over 30 years. So it does not change. And if it's a 15-year, it's amortized over the 15 years. It does not change. The payment does not go down as you pay down your loan, right? The payment's always the same. So if you dump in a bunch of money, you can recast your loan, and then it would reflect not the $500,000 payment, but the $100,000 payment. It's important to know anyway, and typically conventional loans are, but ask about it and see if they even, if they ask, what do you mean? You should probably do something else. Another question to ask is about rate locks, okay? We have no acronym here, but can we renegotiate if the market just drops? And if so, what does that look like? All right, so once again, I'm Garrick Wordmuller. Thank you for liking and subscribing and watching this video. I really do appreciate you, and if you need someone in California and beyond, I do have a network of brokers I know, but if you're in California, I would love to help you out. Obviously, if I'm telling you all this information, I'm setting you up for success with other people. So you can also try me out and be successful with me.
Yeah, Fresh Home Loan Inc. You want mortgage rates without breaking your bank? Well, I got what you need. I'll keep it 100. The very best lender. We sell money, yeah. There's really no equal. Independent mortgage brokers that work for the people. I know that the pandemic's brought many problems. What we offer is better rates.